Hello and welcome to CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, September 7th, 2010. One of the big stories in today's session was that the Wall Street Journal, in an article, said European stress tests for banks understated some holdings of sovereign debt. The newspaper said that its analysis of the bank's disclosures shows that some banks excluded certain sovereign bonds from their tallies, with many reducing the sums to account for short positions they were holding. Without getting into too much detail, the revelations painted a cloud over the Eurozone financial sector, which hurt stocks in the European session. Adding to that, German factory orders unexpectedly fell 2.2% in July, following a 3.6% surge in June. That July's figure was the biggest drop since February of 2009 and undershot forecasts of a 0.5% gain. The data could indicate that Europe's largest economy is losing momentum. Strong growth in Germany masks weaker growth in the rest of the EU, especially the southern tier of countries such as Germany, Portugal, and Greece. Export orders in this report dropped by 3.7% in July from June, driven by a 6.1% decline from the 16-member Euro region economy. European governments are going to undertake austerity measures, cutting spending in order to push down budget deficits, and that will add another factor in reducing demand and overall activity in the fourth quarter. Taking those two pieces of news together, we see that the euro slid rather strongly against the dollar in today's trading. If we zoom this pair out a bit, we see that we had tested the 1.2920 area, which was our resistance a couple of weeks ago that we were unable to break above, and which started a bit of a sideways consolidation. But following 2 weeks of gains, we see this pair now reversing a good portion of the increase we saw in last week's trading and falling below another important level of support at 1.2740. Zooming this a little bit out, we see that that had been the top and bottom of this consolidation range before we broke below that and then had this 2-week upward move in the pair. Following last week, where we had some risk appetite on the back of positive manufacturing data from China and the US and some slightly better than expected non-farm payroll report reading, this week we've started with a very sharp decline. So if these issues persist, especially the concerns about sovereign debt in the European financial system, then we could see the pair try and retest its lows from 2 weeks ago at 1.26. Looking at the US dollar Japanese yen pair, we see a move in favor of the yen following what was a bit of a sideways consolidation pattern, though we did break out of that zone that we had in this pair during the non-farm payroll release. Following the weekend, we stayed within that range, but then now we have moved back down to the 83.50 level, which is actually setting a fresh 15-year low for the pair. We had set a fresh 15-year low on August 24th, and now we moved just below that, but did find some support. Now, the Bank of Japan did say that it's prepared to add more monetary stimulus after last week's emergency decision to expand the credit program that followed a tumble in the dollar against the yen. But since it didn't provide any extra steps so close after that emergency meeting, the main theme was looking to see if there was any mention of intervention. While Bank of Japan Governor Shirakawa said in a press briefing that developments in the U.S. economy have been weaker than the bank had forecast earlier this year, the more important moment came as some of his remarks were interpreted as ruling out direct intervention to stop the yen's near-term advance. So that gave the green light for traders to buy the yen and sell the dollar-yen pair until we reached this support. We also saw a very strong selling in some of our other yen crosses. So the theme to watch for the rest of this week is if we are able to substantially move below this 83.50 level and carve out fresh 15-year lows for this pair. Looking at the euro's weakness and the yen's strength in today's session by pitting the two against each other in the euro-yen pair, we see here too a very strong move in favor of the yen like we did see in the dollar-yen pair. The pair pretty much cut its whole rally from last week, and similar to the sharp decline we saw following the previous Bank of Japan statement on August 30th, where we too paired a very labored up move that had been accumulating for about 4 sessions. Now, will we see another level of support hold here again at 106.20? That'll be an important question going forward the rest of this week. Other higher yielders fell against the yen as well. Here we're looking at the pound-yen pair, and we see here that we broke below our support at 1.2880. This had been a horizontal level of support that held during the last 2 weeks, and we also broke a short-term level of upward sloping support as well. So overall, the yen continues its appreciation now, and while it's probing some new levels against some of its pairs like the pound, we'll see if the levels against the euro and dollar hold. Switching gears now, let's take a look at commodity currencies against the dollar, starting with the Australian dollar. The pair slid today in the general theme of risk aversion, but then managed to rebound after testing the 0.9090 level. That was a upward sloping level of support, connecting our two last lows, but we see that we didn't fall that much in today's trading compared to how much we had rallied during last week after we had this very strong Australian GDP release that helped bolster this pair. Now overnight, the Reserve Bank of Australia left interest rates unchanged for a fourth month in a row in September, citing caution about the global economic outlook. The bank's tentative tone underscored the broader move to risk aversion in today's session. The RBA had altered its language in discussing the U.S. outlook, saying the pace of expansion in the second half is looking weaker compared with last month's assessment that growth may be somewhat lackluster. The Australian dollar was also hit hard by news that the country's Labour Party has finally been able to claim victory in the general election over a week ago. A Labour government is seen likely to keep a resources tax in place, which is viewed by some as negative for the Australian currency, which fell following that announcement. Overall, though, we'll see if this is just a pause in this move higher in the pair, as it does. The strong GDP report did underline some good fundamentals for the economy. Taking a look at our final currency pair, the US dollar Canadian dollar, we see that it rallied today in favor of the US dollar in the general risk aversion of today's session, this coming one day ahead of the Bank of Canada policy announcement. We had seen that in yesterday's session, we had touched the 78.6% retracement of our most recent upswing in this pair, and we did find support there at the 1.0350 level, and rallied to about the 50% retracement of that move, as well as the horizontal level that had acted as support in last week's trading, and we'll see if it perhaps switches its role now to resistance. So the expectations are for the Bank of Canada to raise interest rates, so we'll see if that helps to support the pair in tomorrow's session. We can also set up a downward sloping level of resistance for this pair, and as we can see that the moving averages have turned down a bit, so we'll see if they act as resistance if this pair continues to move higher. Now that will fall in line more, the Canadian dollar does fall in line more with the general ebb and flow of risk sentiment, so we'll see if the Bank of Canada statement puts more emphasis on the actual Canadian fundamentals, not just which way equities are heading in the different global markets. Now let's turn our attention to the upcoming fundamental docket. Tonight we're going to get manufacturing sales data from New Zealand, core machinery orders and bank lending, as well as money supply figures from Japan, and a measure of home loans from Australia. Overnight, Germany posts its trade balance as well as industrial production, and the UK releases its industrial and manufacturing production data as well. Tomorrow in the North American session, as I mentioned, we're going to get the Bank of Canada interest rate decision. Canada also posts its building permits and IV PMI, while the US at 2 p.m. will release its Fed Beige Book, as well as consumer credit, a monthly reading on 3 p.m. And with that, I'll wrap up today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.